Indian stock markets on April 7th, 2025 experienced a dramatic plunge, wiping out 16 lakh crore rupees of investor wealth. The Sensex and Nifty 50 crashed, mirroring a global sell-off fueled by fears of a looming recession in the United States and escalating global trade tensions. The India VIX, a measure of market volatility, spiked, reflecting heightened investor anxiety. Market watchers drew eerie parallels to some of the darkest days in Indian stock market history. From scams to global pandemics, let's look at the top 5 market meltdowns and what we learned from them. Let's rewind to April 28, 1992. The Sensex plummeted 570 points, a staggering 12.7%, following the exposure of the 4,000 crore rupees Harshad Mehta scam. This scandal involved a stockbroker who manipulated the market, shaking investor confidence to its core. The aftermath led to sweeping reforms in market regulation to prevent such occurrences in the future. Fast forward to March 2001. Another stock manipulation scandal surfaced, this time involving broker Ketan Parekh. The Sensex dropped by 4.13%. Compounding the situation were a series of negative events, including the dot-com bust and the devastating Gujarat earthquake. This crash underscored the market's vulnerability to both internal fraud and external shocks. May 17, 2004, brought a different kind of shock. Unexpected general election results triggered a market crash of 11.1%. Concerns arose over the new UPA, government's commitment to economic reforms. The panic was so intense that trading had to be temporarily halted. Clarity and reassurances eventually helped the market stabilize, highlighting the impact of political uncertainty on investor behavior. The global financial crisis hit India hard on January 21, 2008. The Sensex plunged 1,408 points, a 7.4% drop following the collapse of US investment bank Lehman Brothers. This event led to massive outflows of foreign institutional investment and ushered in a prolonged bear market. It served as a stark reminder of how interconnected global markets are and how events in one part of the world can have devastating consequences elsewhere. Most recently, on March 23, 2020, the Sensex recorded its worst single-day fall in history, crashing 3,935 points, or 13.2%. This occurred after India announced a nationwide lockdown in response to the COVID-19 pandemic. The global health crisis sparked fears of a severe recession, leading to widespread panic selling. However, subsequent recovery measures spurred a rebound, demonstrating the market's resilience in the face of unprecedented challenges.